this is certainly a top of mind sort of issue among investors right now. And our view is that a contagious or a systemic scenario could be avoided depending on how timely or decisive the authorities will be in terms of ring fencing the potential damages created by the Evergrande situation. But overall, we think that the property market is definitely quite significant to China. We're talking about one of the largest asset class in the world. In notional terms, 60 trillion US dollars is about 20% of GDP, also directly and indirectly linked to about 15% of corporate earnings. So over the past 2 weeks, we have put out a number of pieces, essentially thinking about all these linkages and how think about how the property market could impact equity markets. So the overall key takeaway here is that we think earnings will likely be lower than what the current market consensus is forecasting. Our number is now about 7% EPS growth for next year, really accounting for the slowdown in the property market versus about 13% by consensus.
Whether it is consumer staples or affordable housing, what are the sectoral and investment themes in the longer term that are really tied to the common prosperity policy that you see?
Well, I would say maybe, let me say two things. Number one, at the market level, we have been emphasizing our preference for Chinese A shares over the offshore market for three simple reasons. Number one is we think that the China A market is less exposed to further regulatory tightening risks than the offshore market. Secondly, we do expect some policy easing to be implemented by the authorities over the next few quarters. So historically, China A has been a little bit more sensitive to macro policy easing than the offshore market. And thirdly, we are seeing pretty significant market liberalization measures being implemented by the authorities, the new Asia Index futures, the creation of Beijing Stock Exchange, and all the new Connect schemes that are coming into place. So basically, we think that the strategic case for Chinese A shares remains pretty attractive. And sectorally, to your question, from a thematic perspective, we would still go for what we call it as policy or regulation beneficiaries, i.e. the sectors that are more aligned with policy bias and China's longer-term development objectives, and they include semiconductor, renewable green energy, electric vehicles, sports, and mass market consumption.